Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those dense corporate reports. And sometimes, as we'll see today, it is all about a little wiggle room in a schedule. Today we're diving into QVC Group Incorporated's latest filing. And it is not about a major new product launch or a dramatic shift in strategy. Instead, it seems they're just letting everyone know they might be a little late to the financial reporting party for their 2025 results. Before we get into the nitty-gritty, if you like your corporate news decoded with a no-nonsense approach, make sure to hit that subscribe button. And for more real time discussions and to connect with fellow enthusiasts, join our Discord community. The link is in the description below. So, what is the big news on the 20th of February 2026? Well, QVC Group Incorporated, or QVC Group Incorporated as they're known in full, has decided to push back the release of their fourth quarter and year-end financial results for 2025. Initially, they had planned to share these numbers on the 26th of February, but now they're saying it will happen within the timeframe for companies considered non-accelerated filers by the Securities and Exchange Commission, or SEC, which is your federal body that oversees these kinds of company reports. Now, this filing is technically an 8K, which is a report for current events that shareholders should know about. In this case, the current event is a schedule adjustment. They're not actually releasing new financial data in this document itself. Instead, they're attaching a press release that explains their decision. It is important to note that this report and the press release are being furnished rather than filed. This is a regulatory distinction that essentially means they're providing the information to the SEC, but not for purposes that would make them legally liable for its content in the same way a formal filing would be. It is a bit of a technicality, but it shows they're being careful about how they communicate. Looking at these filings, we often see a lot of specific stock types mentioned. QVC Group Incorporated mentions its Series A common stock, its Series B common stock, and its 8.0% Series A cumulative redeemable preferred stock. These are basically different classes of ownership in the company, each with its own rights and benefits. For instance, common stock usually gives you voting rights, while preferred stock often comes with a fixed dividend payment and is less risky. The fact that they have different classes, like Class A and Class B common stock, suggests a potentially complex ownership structure, which can sometimes influence control and decision-making within the company. The company's common stock is traded on the NASDAQ stock market, LLC, under the ticker symbol QVCGA. Their Series B common stock is over on the OTCQB venture market, and their preferred stock, the 8.0% Series A cumulative redeemable preferred stock, is also on the NASDAQ stock market LLC under the ticker QVCGP. This tells us that different parts of QVC Group Incorporated are available for public investment on different exchanges, each with its own trading environment and liquidity. For those who like the deep details, the company's IRS employer identification number is 84 to 1,288,730. This is just a unique number assigned by the Internal Revenue Service, or IRS for tax purposes. It doesn't really tell us much about the business's health or performance, but it is part of the official record. So, what is the story here? QVC Group Incorporated is telling the market that their 2025 financial results, which they had slated for release on the 26th of February, will be delayed. They are now going to release them within the timeline allowed for non-accelerated filers. This is not a major crisis, but it does mean investors will have to wait a bit longer to get the full picture of the company's performance in 2025. Now, let's talk about what this delay might mean. When a company postpones its financial reporting, it can sometimes raise questions. Is there something problematic they're trying to sort out, or is it just a simple administrative delay? In this context, the company explicitly states they will report within the timeframe specified as a non-accelerated filer. This implies they are simply aligning with regulatory timelines. Non-accelerated filers generally have more time to submit their reports compared to accelerated or large accelerated filers. This means their internal processes might be structured to take advantage of these longer reporting windows. While there are no specific financial tables to dissect in this particular 8K filing, as it is purely a disclosure about a timing change, we can infer some things about the company's status. The fact that they are identifying themselves as operating within the non-accelerated filer guidelines suggests they might not meet the higher revenue thresholds that would classify them as an accelerated filer. This isn't necessarily negative, but it gives us a clue about their scale. The core of this filing is really about managing expectations. They're proactively communicating a change in their reporting schedule. This is generally seen as good practice as it avoids surprises for investors. If they had simply missed their original deadline without prior notice, it could have led to more speculation and concern. By issuing this K, with the attached press release, they're maintaining transparency about their operational timeline. Looking at the exhibits, we see references to XBRL, which stands for Extensible Business Reporting Language. This is a standard digital format that companies use to report their financial information to the SEC. It makes the data machine readable, allowing for easier analysis and comparison across different companies and reporting periods. The inclusion of the cover page interactive data file just means they are providing their report in this digital format for easier accessibility and processing by regulators and financial data providers. And finally, the report is signed by Catherine C. Jewell, Vice President and Secretary of QVC Group Incorporated. This is the standard sign-off indicating that the company has officially submitted this report. So, to wrap it up, QVC Group Incorporated is telling us they are delaying their 2025 financial results. They are not breaking any rules, but they are taking longer to get their report out, fitting within the schedule for non-accelerated filers. While there are no specific numbers to analyze in this particular document, this filing serves as a reminder that corporate reporting happens on a schedule, and sometimes that schedule has to adjust. It is a low-drama event, focusing more on procedural timing than on deep financial performance indicators. Now, for my take on this, QVC Group Incorporated, by filing this 8K, is demonstrating a commitment to managing investor expectations. They are clearly communicating a schedule adjustment rather than a deep operational problem. The fact that they are operating within the non-accelerated filer status may indicate their size and revenue falls into a category that allows for more reporting flexibility. This is not a negative sign in itself, but it does mean we'll need to wait a little longer for the full financial picture. The key takeaway here is transparency regarding reporting timelines. What is your take on this scheduling update from QVC Group Incorporated? Do you think it is just a minor adjustment, or does it signal anything more about their reporting processes? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up, as it really helps the channel reach more people. And if you want more straightforward analyses like this, make sure you subscribe and hit that notification bell. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and I'll see you in the next one.